welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, it is Friday and it's the last day of the week. The entire week we have seen a green screen and hopefully we see today too. But GIFT Nifty is pointing out to a quiet start, and even the pre-open rates that also look quite tepid at this point of time. If you look at the pre-open rates, Sensex down about 100 points. Even Nifty is down about 22 odd points, but below that 23,150 mark. Below the 23,200 mark at this point of time. But we have had a tepid global handover to start off with. We saw US markets overnight, which did end lower. Accenture particularly, that came out with its second quarterly performance where revenue and margins did look better, but the new bookings that have declined. If you see the Accenture stock, that cracked about 7% as the company did flag off cut in federal spending, delaying the new contracts. And we saw overnight Infosys and Wipro ADRs that also reacted negatively to this news. 2% cuts for Wipro and Infosys ADRs there too. But Indian IT stocks could remain insulated given the fact that we have lower exposure to the US federal government. So yes, we'll watch out how the US stocks unfold in today's trading session also. Now, apart from US, if you look at the Asia Pacific markets, that also started the day on a mixed note. But yes, for the week, if we look at Nifty, that is up about 3% and that is a good news. So like in a recovering market like this, do not forget to drop in your stock related queries and we will take them up shortly. Now, if we take a look at, yesterday's market, how that unfolded, well, bulls continued to dominate for the fourth straight day. It was the longest winning streak in nearly 2 months and Nifty has climbed to the highest level in over a month. Nifty is also above that 23,150 mark on a weekly expiry day, and mid caps and small caps have rallied for the fourth straight day. All the sectoral indices yesterday were in green and 47 out of 50 Nifty stocks did end higher. Now, if you look at today's trade setup, what is going to set up today's tone of the trade? Well, Nifty put call ratio that has fallen to about 1.16 from 1.2 in the previous session. So yes, that was the Nifty put call ratio. A little bit of a a pullback in the markets today. If you look at the F&O ban list, the new stock that has been added, that is your Bajaj Finance and Polycab India. Yesterday, Polycab also witnessed some cuts, but we'll watch due to the wire and cables after Birla Group Adani Enterprises did foray into the wires and cables business. And Manappuram Finance, today this stock also will be watched out in trade after the Bain deal. But however, this is also added in the F&O ban list, so we'll watch out on that front. The stocks that continue to retain, that includes the like of Hindustan Copper, IndusInd Bank and SAIL. On the other hand, the stocks that have been removed includes the likes of BSC. Now, what are the fund flows that we need to watch out? Well, FIs, they continue to be net buyers. They have bought stocks which was worth about 3,200 crore rupees in the cash markets. On the other hand, if you look at the DIIs, they have sold stocks which was worth about 3,100 crore rupees in the cash markets. Now, just a couple of minutes before we go to the open, just a minute before, but before we go there, let's to navigate what your trading strategy should be and to answer your stock related queries, let's quickly get on board with the technical expert of the show. Joining me is Nilesh Jain of Centrum Broking. Nilesh, let me start. Yesterday we saw that Nifty did cross above that 50-day moving average. What is the next level we are watching out, because we are seeing a pre-open rate and open rates which is quite flat?
Well, yesterday we did see a good breakout coming in for the fourth straight session. The market continued its momentum. I think today, looking at the GIFT Nifty and looking at the start right now, which is indicating a sort of a profit taking after 4 days of consecutive rally, I think this profit taking may extend further towards 23,100 or maybe 23,050. But these are the levels where one should look to make a fresh entry, because after 4 days of consecutive gains, the risk and reward is not favorable at current level. Better wait for some dip towards 23,050 to 23,100. These are the good entry point. And support now is shifted towards 22,960. That's the 50-day moving average, which is likely to provide support. In the coming week, we have monthly FNO expiry for the Nifty and Bank Nifty. Now, the data also suggests that 23,000 is a strike on the put side, where we have seen the put writers have shifted their position at 23,000 and call writers are active at 23,300 to 23,500. So overall setup for the coming week looks positive. We may see the levels of 23,300 to 23,500. But as of now, for the day, since it's Friday, so we might see some profit taking to continue in the second half as well.
All right, we have started the day on a lower note. That is your Nifty seeing a bit of a cut, about 0.2% at this point of time, below that 23,200 mark, and of course 23,150 mark also. We're still above that 23,100, but let's see whether or not we can sustain this level also or not, because as Nilesh was also pointing out that it is the Friday, and some profit booking could be on the anvil. Let's take a look at Sensex. Sensex down about 150 points. If you look at the sectoral indices at this point of time, Nifty IT index with seeing a cut of about 2.4%. Definitely this comes on the back of Accenture raising concerns on cut of federal spending, delaying new contracts, and we can see the slide despite the revenue guidance being raised. On the other hand, if we look at Nifty private banks, a bit flat in the red at this point of time. Consumer durables also seeing a bit of a knock at this point of time. On the other hand, if you look at the metal index, still outperforming with about 0.2% gain. Bank Nifty also slightly in the green, but flat in the green, very slim gains at this point of time. Mid cap and small cap indices, they are also eking out very slim gains at this point of time. So yes, a very flat and a tepid start, a very quiet start for the markets today. If you look at some of the gainers on the Nifty 50, that includes the likes of Bajaj Finance. After the management did announce some changes, Anup Shah has been appointed as the managing director, and Rajiv Jain has been elevated to as the vice chairman of Bajaj Finance. So yes, the stock is reacting positively to it. So the sentiment remains quite upbeat. 2.5% gains coming in on Bajaj Finance. Bajaj Auto with about 0.8% gain. Bharat Electronics, Hindalco with about 0.6% gains. Aisha Motors also seeing good gains with about more than 0.5%. If you pull up the top losers on the Nifty 50, that includes the likes of Infosys and TCS. So as we were talking about that, the IT stocks are seeing a bit of a profit booking. Once again, Infosys with about 3% cut, TCS with about 1.5% cut. IndusInd Bank continues to slide for the second day with about 0.3% cut. L&T Dr. Reddy's Lab also one of the top losers on the Nifty 50. But Bank Nifty, very slim gains at this point of time. However, it is still above that 50-100 mark. Nilesh, what do you outline on the Bank Nifty index?
Right, Lovisha. So, Bank Nifty, in fact, we are very much bullish given the kind of setup we are witnessing. It is sustaining well above 50,000 mark. And yesterday as well, we have seen it has also extended its gain for the fourth consecutive session. So, compared to the Nifty index, we are expecting Bank Nifty to outperform in the mass series. And at present, also, Bank Nifty is looking attractive. On the upside, in the spot level, Bank Nifty, I think it is heading towards 50,500 to 51,000. 51,000 is the resistance of its 200-day moving average as well. So that is likely to be tested from here. Any dip should be used as a buying opportunity. Even if you look at stock specific action within the banking space, counters like Axis Bank, State Bank of India, ICICI Bank. So these are the stocks that are driving the entire momentum in the Bank Nifty. So overall setup looks positive. One should use any dip, if at all we see, should be used as a buying opportunity. And 50,500 to 51,000 are the levels on the upside within this space. State Bank of India continues to remain a preferred bet within PSU banking space for upside momentum to continue towards 760, 775, and stop loss should be placed below 738. Apart from that, Axis Bank is something that is looking attractive at current level, and we are expecting follow-up move to continue towards 1080, 1085. Stop loss should be placed below 1035.
Okay, all right. Let's take a look at the Nifty IT stocks, because that is the big headline of today. Nilesh, Nifty IT with about 1.8% cut at this point of time. They have been underperforming lately, and given the Accenture's caution on the federal cut spending, how do you expect the macro risks to play out, and where do you see Nifty IT to go?
Absolutely. So Nifty IT has been under pressure since a long time, and in couple of sessions back, we saw some bit of respite. But yesterday as well, if you see, in the second half, we saw some profit taking at the high levels. So pullbacks are not sustaining, and the trend is still looking weak. Although today we are witnessing some recovery attempt from the lower levels. So it is important to see whether Nifty IT index sustain above 36,700 levels. So that is still acting as a stiff resistance for the Nifty IT index. Overall, we may see some pullback, but these pullbacks are unlikely to be sustainable. Better to stay away as of now. Stock specification within IT space like small cap or mid cap ITs can be looked at. We may see some momentum to continue out there, but large cap ITs as of now is an avoid from our side.
The large caps ITs avoid from your side. But let's take a look at some of the stocks in focus. That is your Manappuram Finance. The company did announce a preferential allotment of equity shares and warrants worth about 4,300 crore rupees to Bain Capital. Nilesh, if you look at Manappuram Finance from October lows, the stock has shown a very smart recovery. So what does the near-term chart indicate for Manappuram Finance?
No doubt that the stock has been in a very strong uptrend, and today it has hit a new record high as well. So the overall structure looks strong, but one should wait for some meaningful decline before initiating any long position in this particular stock, because the risk and reward is not favorable after consecutive 4 months of gain. In this series, it is up close to 10%. So buy and decline should be the strategy. And given the kind of run-up that we have seen in the gold, is Manappuram and other gold financing companies are also beneficiary for that. So overall, Manappuram upside target comes around 240 to 255. So these are the position target, and the stop loss can be placed somewhere around 204. So buy and decline should be the strategy. Structure looks strong.
Let's take a look at Bajaj Finance, also one of the top Nifty gainer at this point of time. The company did announce key leadership changes, with Rajiv Jain appointed as the vice chairman in capacity of an executive director for a 3-year term starting April 1st onwards. And Anup Kumar Shah, that is currently the deputy managing director, has also been redesignated as the managing director for the remainder of his tenure. Nilesh, plenty of brokerages, experts, they've been quite bullish on the stock on Bajaj Finance, and they expect around levels of about 11,000. Would you concur with this view?
Absolutely. So definitely this particular counter is in a very strong uptrend. Today, again, it has hit a new record high. So structure wise, it looks like it is heading towards 9,500 from a short term point of view. And the position target comes somewhere around 10,000 plus. So yes, this particular counter has a very strong setup, but buy and decline should be the strategy. Again, the stock has been in a very strong uptrend. So the risk and reward at present is not favorable for the long. Better to wait for some dip to buy, or one can buy in a staggered manner. Positional targets are very much intact at 10,000 plus, and the stop loss for the long should be placed somewhere around 8,550.
You can watch out as a support zone. But let's take some viewer queries. Well, the first query coming in from Naveen is the view on UPL. On how does the stock look like? Nilesh, how does the stock look like on the charts? From January end onwards, the stock has seen quite a good breakout. Where do you expect this to sustain?
We are talking about UPL. UPL, yes, we have seen a good rebound from the lower levels. Good breakout can also be seen on the chart, and good build up on the long side was also seen in the previous couple of sessions. So structure wise, this particular stock looks strong for further momentum to continue towards 680 to 700. So these are again a little bit positional target, not from a trading perspective. And stop loss should be placed somewhere around 625. The structure looks strong. If somebody has already bought it, then stay put, keep a trailing stop loss, and ride this momentum till 700 plus.
Let's move on to another viewer query. That is, your Satya is asking the levels to enter for the next 12 to 18 months for AB Capital. Past 1 month, very strong up move, Nilesh, for AB Capital, 14% uptick. Where do you see the stock to go next?
Absolutely. So far in the March stage, it's up close to 15%. And looking at the rebound from the lower levels, we expect a follow-up move to continue. Structure looks very strong. And given the kind of correction, it is still giving a good opportunity to accumulate this particular stock for a upside target of 200 plus.
But let's take one more stock in focus, which is Hindalco. This is also one of the top Nifty gainers today. The company will be investing about 45,000 crore rupees across its aluminium, copper and specialty alumina businesses in the future. The group chairman Kumar Mangalam Birla did say at an event yesterday. Nilesh, if you look at the metal pack, they have been doing quite well. They've been outperforming the market, in the past 1 month. But what is your take on an individual counter as Hindalco?
So individual counter within aluminum space, definitely Hindalco and Nalco, both the stocks are having a very strong setup. This particular counter, Hindalco, formed a big rounding bottom formation on the daily time frame chart. So structure wise looks strong for a follow-up move to continue towards 740, 760, or I wouldn't be surprised if we see a new record high coming in this particular stock. So again, a buy and decline should be the strategy. One can keep a stop loss below 670, and On the upside, from a trading perspective, short-term target comes around 735. And from April series point of view, we are expecting a new record high in this particular counter towards 780 plus.
But let's take another viewer query at this point of time. Ayush Khanna is asking the view on REC, and he's asking whether it has bottomed out and what are the good levels to enter. REC right now it's seeing a a little bit of an up move because of the market turnaround, Nilesh. But from December onwards, very sharp cut, 20% down.
Absolutely. So if you look at from the top, no doubt we have seen a good correction in this particular counter. But good part is that from the lower levels, we have seen a smart recovery as well. So given the kind of setup, there could be possibility of some consolidation because we are not expecting any V-shaped recovery in this particular counter. But yes, this particular pullback is likely to extend further. And if somebody wants to take a view from a positional perspective of 3 to 5 months, I think it's a good bet to go long in this particular counter. Position target comes around 480 to 500, and stop loss should be placed somewhere around 385. Better strategy would be to accumulate from a positional perspective rather than trading.
Let's take a stock in focus, and also we have a viewer query on this. On the stock in focus, that is your Hero MotoCorp. The company did announce a strategic investment of up to 525 crore rupees in Euler Motors. So this marks an entry for Hero MotoCorp into the electric three-wheeler segment. Nilesh, extremely negative trend for the stock past few months. Do you expect this trend to stay? And we have a query on by Kamal Raja. He's asking, can we start accumulating the stock for a very long-term horizon?
Absolutely, Lovisha. So you have rightly pointed out a very steep correction in this particular counter. In fact, Hero Moto is one of the underperformer within the auto space, specifically even in the two-wheeler space. If you see, for the sixth consecutive month, it has been forming a lower highs, lower top and lower bottom formation. So structure-wise, it has corrected from the levels of 6,000. Currently, it is at 3,600. So yes, these are the good entry point. If somebody is looking to make an entry in the portfolio from a positional perspective, I think these are good levels to accumulate. This particular counter has a potential to deliver a decent CAGR of 18 to 20% from here. So at present, the risk and reward is also favorable. It has a very strong support at 3,300. And positionally, we can expect a rebound to continue towards 4,500 to 5,000 from 6 to 8 months perspective. And within this space, we also like Bajaj Auto. This particular counter has a better structure than Hero Moto. So one can look at Bajaj Auto as well, where we are expecting a positional target of 8,600 to 8,800. Stop loss can be placed somewhere around 7,600.
Stop loss at 7,600. But let's move on to another, viewer query. That is, your cat is asking the views on HDFC Bank and whether it is a good time to buy. Nilesh, if you look at from January mid onwards, the stock is seeing a good run up, 8% gains for the index heavyweight. Where do you expect the stock to go?
Well, Lovisha, this particular stock has been one of the outperformer, I would say, within the banking space. We haven't seen any meaningful correction. There was a consolidation. Now, again, the momentum has picked up. So, a good bet to play in the banking space, specifically to play the private sector bank. So we may see the levels of 1850 to 1900 from a short to medium term point of view. It's a good bet to accumulate and keep a stop loss below 1680. But more sort of one should look at from a positional perspective rather than trading. It should be there in the portfolio from 1 year plus time horizon.
Let's move on to another view query. Well, Debu K is asking the view on Honda Power Systems. Honda Power, if you look at the stock, very negative trend, however, from the past 6 months itself, Nilesh. Do you expect this underperformance to stay here for the time being?
See, we have seen a sharp decline from the levels of 4,200 or 4,300. It has almost corrected given a correction of 50%. But now, after a sharp decline, it is giving an indication of short-term bottom formation. So we may see a pullback to continue, but the volumes are very dry. So one has to be careful. Only 2,400 volumes have been traded so far. So in this kind of illiquid counter, one has to be very careful. But yes, at present, the risk and reward is looking attractive. One can keep a stop loss at 1950 and take a contra bet for a momentum to continue towards 2,300 to 2,500.
But let's take a look at another viewer query. That is, your dream is asking the views on long-term review on Keynes Tech. Keynes Tech, today the stock is reacting very positively, and the past 1 month has been also quite well for the stock. What is the next target that you're eyeing out for, Nilesh, on the counter?
Could you please repeat the name of the stock?
Keynes Tech.
Okay, Keynes Technology. Okay. So
Yes.
Keynes, yes, we have seen a good base formation, a very good setup. After a correction, the counter is gradually moving higher. A good bottoming out process can be seen in this particular stock. And today it is making an attempt to cross 50-day moving average as well. So looks positive for from a positional perspective. Yes, it's a good buy, good bet to accumulate in the portfolio. Keep a stop loss below 4,000. It has a potential to test 5,500 from a short-term point of view. If it breaks 5,500, then the next target would be 6,600 to 7,000. So yes, looks good. Keep a trailing stop loss and stay put.
Stay put for the counter. But let's move on to another viewer query. Well, Debu K is asking the views on Hitachi India. Hitachi Energy, if you look at past 1 month, 3.4% gains. Past 6 months, very range-bound performance for the stock coming in, Nilesh. What do you expect? What do you see on the charts for the counter?
Well, Hitachi Energy you are talking about. Just give me a minute. Sorry, I'm not able to find this particular counter.
Move on to
Is
another
it
one.
Hitachi Energy, Lovisha,
Yeah,
which
yeah, it
is
is.
currently trading 11,875, if I'm not wrong, right?
Yes,
Uh,
yes, yes. That is the one.
Right, right. So this particular stock, I think, looking at the overall setup, we have seen a good correction from the highs, but at present is not looking that attractive. Better to, focus on better stocks available within this space. This particular counter is an avoid from our side. But if somebody is already holding the long position, can keep a trailing stop loss at 11,200. And if it breaks about 12,100, then the next target would be 12,500.
Focus, that is your HUL. The company has approved an investment to acquire 14% stake in Plastic Private Limited, which is a key player in recycled flexible plastics. Well, Nilesh, how does this stock look like in the near term for HUL, one of the top FMCG players?
Right. So if you look at the entire FMCG basket as a whole, we have seen a decent correction, and FMCG in fact have been one of the underperformer sector as well. But now looking at the recent development from the lower levels, we are witnessing a gradual up move. Even in HUL, we are expecting a follow-up move to continue towards 2,300 to 2,350. Purely from a trading perspective, one can keep a stop loss below 2,180, and this momentum may extend towards 2,300 to 2,350.
Let's take another stock in focus. That is, we have another query coming in from Dream. Is that what is the long-term view on Clean Science? Clean Science, any thoughts, Nilesh?
See, from a long-term perspective as well, if you see, we are not getting any clear view, clear trend in this particular stock. This stock has been one of the underperformers since 2021, when we saw a new record high coming in at near about 2,500 odd levels. And since then, we have seen a gradual decline in this particular counter. So it is better to avoid taking any positional bet. But still, if somebody's already bought it, then follow stick stop losses as well. So as of now, the stop loss comes around 1120. And if somebody wants to stay put in this particular counter, then wait for important levels on the upside. If it breaks above 1400, then probably the next target may be seen towards 1550 to 1600. But we are not advising any positional bet in this particular counter since the trend is missing.
Let's move on to another viewer query. Well, Ayush Khanna is asking the views on REC, and he's asking whether it has bottomed out and what are the levels to enter. Nilesh, what are your thoughts?
We have already covered this query. REC, it looks good from a positional perspective. One can accumulate, but keep a stop loss below 400. And if it breaks above 450, then the next target would be somewhere around 480 to 500. This should be looked at from positional perspective. We may see a momentum to continue.
All right. When Satya is asking the views on Poonawalla Finance, what is the long-term view for 12 to 18 months? Well, what is your any thoughts, Nilesh, on the counter? Because today the stock is reacting quite well, 4% uptick.
Right. In fact, if you see in past 4-5 session, we have seen a strong rebound from the levels of 260. And in fact, 270 was the recent low that it made. And from those levels, we have seen a good momentum so far in this month. It is up close to 18%. So yes, this pullback is likely to extend towards 355 to 370. But it is important for this particular stock to sustain above 340 levels. If it breaks above 340 decisively, then yes, looks good for further momentum to continue towards 380 to 400 as well. Keep a stop loss below 315. So that should be the stop loss if somebody is buying from a trading perspective, and looks good for a pullback to continue.
Should continue. Let's move on to another viewer query. Well, Epic is asking the views on Varun Beverages. Nilesh, how does the stock look like? Because plenty of brokerages have said that Varun Beverages could move up to 800 odd levels. So, what is your thought?
Right, positionally, this particular stock is looking attractive as well, and 700 plus kind of levels we might see from medium term point of view. But as of now, after a recent move that we saw of close to 25% so far in the mass series itself, there could be possibility of some profit taking. But yes, one should have a positional view on this particular stock, and position target comes around 600 and 750, and stop loss should be placed at 490.
Point of time. But Nilesh, there was one index that has been, quite doing well yesterday also and today also. That is a Nifty Realty Index. Any picks that you have from the realty space?
Absolutely. So I was about to comment on the Nifty Realty Pack because this is something that is looking attractive. Nifty Realty has formed a bottoming out process. It has given a good breakout today above 50-day moving average. It is already trading well above its 21 DMA. It looks like it is heading towards 950. That's the 100 DMA for the Nifty Realty Index. So DLF will be our preferred bet within this space, given the kind of setup we are witnessing this particular counter. Good build-up is happening on the long side. Close to 2% fresh OI addition can be seen. So yes, looks bullish for upside target of 730 to 750. One can keep a stop loss below 690. So DLF is something that can be bought. Apart from that, Godrej Properties is another stock that is also looking positive for further momentum to continue towards 2250 to 2350. Stop loss can be placed somewhere around 2090.
Before we let you go, Nilesh, we are seeing a bit of a turnaround, but however, today we have flipped in the red. But what are your top buying picks at this hour?
See, DLF, Godrej Properties, yes, these are the couple of picks that are already on our radar. And apart from that, a couple of cash stocks. So PCBL is looking good given the kind of breakout today that we have seen in PCBL. Looks good for 420 to 435 on the upside. One can keep a stop loss below 391. That's the today's low. And yes, PCBL can be bought within two-wheeler space. We are liking Bajaj Auto. I've already mentioned this particular counter, so we are very much bullish for upside target of 8,150 to 8,300. One can keep a stop loss below 7,880, and Bajaj Auto can also be bought.
Right. With that, we have to let you go, Nilesh. But thank you so much for your time and answering our viewer queries so patiently.
Thank you, Lovisha. Thank you for having me on your channel.
All right, let's take a quick look at the markets. We did start in the red. However, what a strong recovery. Well, the Sensex is up about 150 points. Nifty is also back above that 22 to 200 odd levels. So yes, we are finally above that 23 200. We did hit yesterday, but we couldn't sustain that and the gains fizzled out. Today, once again, we are above that 23 200 mark. If you look at some of the index gainers, well, Bank Nifty once again, flat in the green at this point of time. Nifty Auto Index doing well. What is, however, outperforming the market, that is the Nifty Realty Index which we were discussing, with about nearly 3% gains that is coming in. Nifty Metal Index 0.3% gains. Nifty Pharma Index with about a percent gain or so, and Nifty FMCG also doing well, flat in the green at this point of time. However, what is not doing well, that is your Nifty IT Index, given the sentiment. But however, even that has also, trimmed majority of its losses, because we did start with about 2% cut, but right now it is about, with about 0.2% cut at this point of time. But let's move on and get on board with our fundamental guest of the show. We have Shrikant Chouhan, Head Equity Research, Kotak Securities, joining us. Shrikant, good afternoon. It looks like a fifth straight days of gains. Do you believe that this turnaround would be sustainable?
Good morning. I think, yes, if we go through with the overall performance of the market for last, let's say, 10 days, then yes, we are seeing this time very good buying break for the market. we are seeing a broad-based buying in almost all the indices except IT. Maybe it was like under the pressure on the back of the specific means most of the time market discounts a lot of things well in advance, and yesterday's Accenture numbers were something which was like dampening to the sentiment. But today, after these numbers, we are seeing some upside for all these IT companies, and that's the reason also we are seeing some specific strength in the market. But broadly, I'm of the view that the when the market was close to this 22,000 levels, that time they were like very attractive in terms of valuations, in terms of like the correction and all. Currently, we are at some crucial levels, like around 23,500, 23,400. We are expecting some profit booking because it's a pullback rally that we are seeing in the market. But otherwise, I am of the view that if there is a medium to long term view, then certainly we should look for adding select stocks even at current levels and more on dips.
You did mention that now we are getting slowly into a bit of a positive side given the Accenture has raised its revenue guidance. But do you believe that the earnings expectations have been reset as India Inc. Approaches its Q4 results and given the correction that we have also seen?
No, I think see, the investors will definitely look for the numbers, the overall guidance from all these IT companies, and after that only we can see specific buying interest. And today, what we are seeing is just a short covering because most of these stocks have fallen to their important support levels, and most of the time, whenever there is a correction in IT companies, especially IT index corrects nearly 25 to 30%. This time, if we see the correction, then it is close to 20%, 21% when the correction happened all in all these IT stocks as well as on the indices. So, in case if there is any disappointment or let's say if there is any specific talk on the guidance on the negative side, then we could see some more sell-off. But then that will be the last that I am seeing based on the overall performance of the IT companies. Most of these stocks have fallen to their crucial, I can support levels, but at the same time, fundamentally also they have fallen to their uh, decent levels. But again, it depends mostly on the earnings. And if the earnings or if they are going to cut the guidance, then there will be some more sell-off. And that's the reason if there is a long-term view, then only we should look for adding them. Otherwise, it is better to stay put. Let the numbers come, let the commentary come on the numbers on the overall performance, on the overall order and the outlook of the IT sector, and then only we should look for taking interest.
But do you expect the earnings downgrades to slow down from here on? What are your expectations? You must have had some talks with the management too.
No, like specifically, there is no as such any specific talk, but the way the things are turning and shaping up in the US market, we could see some more specific announcements from the IT companies. That's the view. But otherwise, and see, like market always tries to discount a lot of things well in advance. So maybe that's the reason this particular sector is under pressure. But for other indices, for other sectors, we are of the view that they should do well. And if the commentary comes a little bit better, or if the result starts showing some specific strength, then we could see further more activity in the market.
One point that Accenture did raise was the caution on federal spending cut. Now that has raised some concerns whether this discretionary demand for IT would indeed improve because Indian companies do remain insulated, but where do you believe that this puts us with respect to macro risks?
See, like that was the fear some few months back, but now the way there is talk on the recession side and economic growth is slowing down and all from the Fed and from other top broking firms of US. The question is on the overall business that they give globally. And we need to see that how actually all these IT company comes out with their guidance. So only that on the basis of that commentary only we will come out with specific reasoning on the earnings and all. But otherwise, I am of the view that all this particular news flow is already the prices have started. I'm going to say all these companies have started discounting to it.
Shrikant, right now the consensus is that banks are the right, are at the right price to bet on. Do you hold a contrarian view, or what are you expecting?
No, I think see the overall BFSI space is showing a lot of strength, and even if we go through with their overall current fundamentals and the developments on the liquidity side as well as the NPA cycle and all, we are of the view that this particular space should do well. In that, if you see specifically NBFCs should do well in this particular next. I'm going to say in the near term. Also, we are bullish on insurance, we are bullish on banks. So broadly, I'm of the view that this particular space should be on the watch list because see, in the last year also, in last 12 months also, if we see the overall performance of this BFSI, then it was not that encouraging because of the CASA ratio and because of the overall deposit growth and all. But now these difficulties are easing and we could see some specific buying interest, and especially whenever there is like uncertainties in the market and it's very difficult to predict that how tariff will turn for India and for other emerging markets. Most of the time in such type of uncertainties we see specific buying interest in uh, defensives or in those companies where there is decent upside in terms of fundamentals. And also our policymakers, RBI, they are proactive in terms of infusing specific liquidity into the system, which is something going to help not only to banks but also to the borrowers. So broadly, I'm of the view that this particular space should do well. But yes, we need to focus on large cap companies because again, the overall scenario is suggesting us that we are going to see range bound sort of activity and like we are not expecting major upside for all these stocks. Most of these stocks are very close to their fair values, nearly 10-15% sort of upside that we are expecting from large cap companies. And that's the reason we need to be more specific to the large cap companies from the BFSI space.
You did mention that at the time of uncertainty and tariff noise, defensives tend to do well. But if you look at some of the past months, we can see FMCG has remained quite bogged down despite the budget push that we saw. Export-oriented themes have been like slowly, gradually becoming out of flavor because there is certain tariff uncertainty which is playing out. So where does this leave us? Banks are supposed to be the one thing that everybody is going to bank on then?
No, it's not like that. Of course, like the major focus will be on the banks, but at the same time, FMCG, especially consumer staples, should do well from here onward because now the consumption trend will change. Yes, again, we need to see that whether this companies reports better number on the volume growth or not. So that will decide a lot. But the way the announcements are there in terms of like the specific relief for taxpayers, then again infusion of the liquidity into the system, cutting interest rates, and the way we are collecting the data that the consumption is increasing on the rural side. So all these things are definitely going to help this consumer staple companies, and there also we are expecting some flows. For our pharma companies, maybe after the first week of the April, we will come to know that whether the US is going to impose tariff on pharma companies or not. And if that an announcement delays or if something comes positive on that particular front, then we can also expect activity and specific buying interest in pharma companies because most of the time, whenever there is uncertainty, we see specific buying flows for IT as well as BFSI and for pharma companies. This time IT is like still going to remain under pressure, and we need to see that how actually they comes out with their overall quarterly earnings. But broadly, I am of the view that we need to focus more on BFSI as well as pharma and even this FMCG, consumer staples.
Shrikant, I want to understand about the FI flows also, because this week we've seen FIs turning net buyers twice at least. So do you believe that the worst has been over in terms of FI outflows, or where do you expect this to go?
See, like FI outflows depends upon several factors, and they take mostly the macro view on the uh, on any country as well as on the global factors. So based on that, they like increase their holdings or they reduce their positions in that particular market. So this time also, if you see, US was doing well. It has been like consistently performing for last almost 6 months. But now we are seeing some correction in the US equities. We saw a good amount of correction in dollar index from the levels of 109 to 103. And also, if we consider our domestic macros, then there we can see that the inflation is like cooling off from the highs. We were expecting some 4%. It has come to some 3.6%. We are expecting now it should remain somewhere close to 4%. And also, if we consider the overall the performance on the Rabi and Kharif production side, there also we see a good amount of like positive level announcement. I'm going to say the production is much better than the expectation. So broadly, I am of the view that all these factors are supporting for FIs to stay invested in our markets. But few months back, I'm going to say just 2 months back, our currency was at 87 90, 88 levels. Dollar index was at 109. So it was not like supportive scenario or sentiments for them to invest, to stay invested in the country like India, where the expensive value, valuations were also like on the expensive side. But this time, all these things are under control, and I am of the view that now they should again look for either buying or reducing their selling force in the market.
With that, we have to let you go. Thank you so much for your time, and we hope that we connect with you soon.
It's my pleasure. Thank you so much.
Thank you. Right, let's take a quick check of the markets at this point of time. We did see a little bit of a recovery despite opening in the red, when we're still holding in the green. Sensex is up about 150 points. Nifty is above that 23,250 mark. So yes, we have been cruising ahead despite what we started with. If you look at what is contributing to the most at this point of time to Nifty's up move, that includes the likes of Bajaj Finance with about 2% gains, Reliance Industries with about 0.6% gain, Sun Pharma with about 1.6% gain at this point of time. So yes, Bajaj Finance, one of the index heavyweights, trying to lift, heavy lift the market at this point of time after the management changes. If you look at the Nifty IT index, it's flat in the red at this point of time. We did open with deep cuts. However, it has staged a little bit of a comeback, and it is right now flat in the red. Nifty auto index continuing to exhibit resilience with about 0.5% gain. Pharma index with about 1% gain, and Nifty realty index, as we were talking about, it has been outperforming, and today also one of the star sectoral performers at this point of time with about 2% gains. Mid caps and small caps, both of them doing well. Mid caps with about 1% gain, small caps also with 1% gain. So both of them, the broader end of the markets, have been outperforming the headline indices. So let's see whether or not this recovery sustains in the second half of the session too. But with that, we've come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for Closing Bell. We will be discussing about how the market is developed and what the stocks were in focus. Until then, signing off.